Now, so these are the variations, the three different variations I went over. If you would like to learn more, go ahead on Amazon, show me some love, go ahead and purchase that. And also, if you go on YouTube, you feel free to watch the videos, okay? It's free to watch. All I would ask is a share, like, and comment. Definitely subscribe. I would truly, truly appreciate this. Now, back to the setup. Where did it go? Let's collapse real quick. That way we can find it a bit easier. There we go. All right. I want you guys to be able to see this as clear as day. Let's bring this down. All right. So remember, this setup is based off the daily. We had the double top. See that? Boom. Now, again, all we waiting for is a bearish engulfing, right? And then again, like I said, we place our stop loss at the previous high. Now, there goes our sell. It's very simple. See that? Place it on the daily and then go to the 4 hour. Right here is our entry. Now, remember the last variation that I went over where you get a bearish candle that engulfed the last two previous selling candles, right? The last previous two buying candles. Now, TP will be based off structure, of course. Now, you want to use the daily time frame for structure. Now, this is how low it went. Now, we did get a stop high, but you're not worrying about that because the setup is based off the higher time frame, and your stop loss is at the last high. Okay, it literally melted. So now what we're gonna do is we're gonna transition back to the daily. So that's one thing we always want to do. You have to practice that. Once you enter the trade on the lower time frame, once you execute, you put your stop loss accordingly. You want to go to your higher time frame that you are trading to see the overall picture and let the market plays out. And also, please remember, we're taking sells or buys based off monthly, weekly, and daily. So give it some time to play out. Okay. Not all the time is going to play out in the same day or within the same 4 hour. Sometimes it might play out the next day. Sometimes it might take 8 hours before it start moving. Okay. So again, it's freedom. You just take it and leave it. See that right there? Bearish engulfing, stop loss at the last high. Boom, it melted. So let's go ahead and go to the daily. So we could identify structure as far as where do we put our take profit based on where the market might go for a possible reversal or turnaround point. But we got to target structure as always, right? So let's move this. Stretch this out real quick. All right, look at that. You see that? That was our daily double top and structure point wise. Now we have our first structure, which was down here, right? As far as TP goes, let's stretch this out real quick. So we matching it with the wick, right? That's the first one. Now this one goes hand in hand with this structure point right there to the left. Okay. Now, and then we have our last structure point, which is here. All right. We identified, I'm sorry, which is right there. We identified the last buying candle, right? And we're going to match it with the wick high, like so. And then we run it straight across. Okay. See that? Move that accordingly. All right. So that will be our target TP point. So one of the things that I need you guys to learn to understand when it comes to placing your take profit point, always place it at the turnaround point. So use the line chart to identify the turnaround point. Okay. Because sometimes it may not go all the way into the wick. Okay. So right here, let's adjust this real quick, right? If I stretch it, I'm putting exactly at the turnaround point. You see that? TP smash. Now, you would have been in that trade for how many days now? Based on that, so let's just start with this. 1, 2, 3, 4, 5, 6 days. All right. It's just one trade. All right. Just one trade. Just that. And it's that easy, right? So, and that method itself allow you to be one with the market where you're not doing too much from a sell that leads to a buy, right? So from point to the next structure point. So that means at this low point, right? At this retest point, if we're looking for a buy based off the daily time frame, right? Which is going to be right there. So once we go to the 4 hour time frame, all we'll be waiting for is for a bullish engulfing based off this structure point, stop loss at the low to go up. So when you are back testing, that's what you are back testing. You want to understand how the market buys and how the market sells. So when you go live, you will read and react. So let me throw that in there also. I don't want to miss some information. I want to give you guys as much information as possible so you can truly understand the ins and out when it comes to the market. Okay. All right. When you trade weeklies, monthly, all right, and daily, you're going from zone to zone. Okay. That means if you get this pillar, okay, and market falls to structure point here, right? You buy it here, okay? When you buy it at this point, you target in this structure point right there. So when and if market get to the structure point, we're not saying it's gonna break through it. That's also one of the things I want to throw out there. When you come to placing your zone, it's just a zone. You place a horizontal line at the turnaround point and another horizontal line at the wick. If you choose to use the rectangle property, you start at the close of either for a top zone at the close of the last bullish candle, for a bottom zone at the close of the last selling candle. We are not here to name zones to give it an identity where we so fixated on it. What I mean by that is this is just a top zone. That's our target TP. We close up here. So when and if, right? When market, now this itself become a double top, right? We got a DT, right? A double top, right? When and if, again, when and if on the 4 hour or the H4, right? Market give us a bearish engulfing for the possible reversal. We will take the sell to come back down. Now, if we are so fixated on, oh man, this is a resistance, right? We might fail to understand that a lot of time, right? This is a zone, right? A lot of time, the market will go up to the zone, right? And it'll give us a bearish engulfing, right? Let's do this real quick. Boom. This is the last bullish, right? And then we get a bearish engulfing. Let's change the color. Let's keep it red since red was going up, right? Right. We got, this is our last bullish candle, right? And in here, we get a bearish engulfing. Okay. Right. We get a bearish engulfing to fall. We take our sell for what it is, right? And then the market turns around and give us this, a bullish engulfing to continue up, right? Because you naming the zone, right? Because you naming the zone instead of just seeing it for what it is, you call it a resistant. You fail to understand this is a continuation. All you got to do is just take your bullish to continue up. Your job is to simply read and react. Because you name it, you see it as a resistant. You only thinking sell, 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 sell. You don't want to do that. That's why it's just a zone. Your job is just to simply read and react. Okay. Now, if you don't want to take that, by all means, just leave it alone. And that right there is called a breakout. Okay, so remember, there's a breakout and there's a break and retest. A breakout is pretty much when you get the last candle close above, right, and then it gives you a bearish candle, but did not engulf, and then it gives you a bullish candle that engulf. You would enter to go up. Now, if I were to use a line chart, right, it will look something like this. You see that? That is a breakout. Now, on the bigger picture, right, it will be a break and retest where you wait for the bigger setup to come up. To come down to go up. Okay. So there's a breakout and then there's the full break and retest. A lot of time, market does give you the breakout, not the full break and retest that we are technically used to. All right. So a zone is just a zone, please. Okay. A zone is just a zone. Our job is to simply read and react. All right. So back to the setup. All right. So we took this daily setup for what it was and it targeted the next zone. That's our TP. TP smash, right? Yes, you held that trade for a week, but that's dope. That's a lot of money. But think about the freedom. That's why I always say rule number one when it comes to trading, before studying or anything, before picking up a book, you need to have a job. A 9 to 5. I don't care career wise. I'm a paramedic, right? I'm an EMT paramedic, but I still trade. I love to work. All right. I'm being very, very honest. All right. I work at Holy Cross. I do overnight shifts on the weekends. Right. Well, that's what I used to do from Thursday, Friday, Saturday, Sundays. Right. Because the market's closed in. But the reason you want to do that, okay, you need to have a job because your 9 to 5 is going to pay your bills. While your 9 to 5 is paying your bills, now you could focus on truly learning to understand how to trade, right? Look, I'm gonna go right back to this again because this is very, very important when it comes to truly learning to understand how to trade. Okay. You want to have a job, right? You want to have a job, please. That way you're not stressing out. Now, when you do decided to trade, guess what you're gonna do, right? You're gonna learn, right? You're gonna learn the ins and outs, right? Technical analysis, the double top setup, the double bottom setups, and what does the market give you before it buys, which is a bullish engulfing. What does it give you before it sell, which is a bearish engulfing? Understand that's what it does. Now you want to learn the different variation of bullish engulfing and bearish engulfing, right? This is you studying. This is you back testing. You taking notes. You creating your own flashcards, right? Where you go, okay, cool. This is a double top, boom, right? It hit exactly. We got a bearish engulfing where it engulfed the last two or the last three, right? You took this where your entry would have been. This is your stop loss, and then you target your TP. You screenshot this. That's a flashcard. That's you back testing. And as you back test, you will learn the different variations of the double tops or what the market gives you before it buys, before it sells. Again, that's why I have these books. It shows you the setups that the market will give you before it moves. And if you just go based off these setups himself, right? If you go based off the setup, you know exactly what to back test. Okay. Like you will literally know and understand what to back test. So when you look at this right here, right? When you see this double top, all you got to do is just go to your chart, go to the higher time frame, identify the same double top, and then look for the price action, highlight it, identify the entry point. Make sure you put your little notes in there. Entry point, SL, my stop loss, right? And then you want to pre-calculate based on my lot size. Okay, if I would have entered here at a 0.01, I'll be risking $87 because, gold, right? And then my target TP would be, again, we're not thinking about the money because we just trading, right? I'm risking $87. Let's just say my overall stop loss, what I know, my 1% or 2% is $100, but you're risking 87, which is great, right? And then you target the structure TP next low. The next low could be 187. It could be 175. It's not, oh man, I'm risking 87 to make 175. My stop loss based on my 1%, it says $100, but this stop loss happened to be $85. Perfect. My target TP is just the next low, and it just happened to be 187. Don't look at the money. Just focus on just doing the work. All right. I went through this. I'm repeating this over and over to make sure you understand this. All right. I am teaching you to understand the ins and outs, and all you have to do is just simply read and react. Okay. Let's continue with this real quick. So again, you have a job. Guess what you're gonna do, right? You're gonna learn, right? You're gonna learn. You're gonna back test the double tops, the double bottoms, right? And after the double tops comes what? The break and retest. After the double tops comes what? Break and retest to go up, right? You understand a previous low high has to be broken. A previous lower higher low has to be broken for the market to reverse. You understanding these things, right? You're learning the PAs, price action, what the market gives you before it moves, the stop loss, the proper stop loss placement. All of this is your trading psychology. Literally. All right. I have that also for you, right? The discipline paradox. You need help understanding, having if you feel like you don't have the proper psychology when it comes to trading, this is all that you need. This, again, is a step-by-step guide. I am telling you exactly what you need to do. I'm not telling you about my story. You're not me. All right. Our greed level is not the same. Our discipline level is not the same. Okay. We all go through our different trial and tribulation. Our blessings are different. Okay. I am teaching you, telling you exactly what you need to do. Right. So that way you fall in line accordingly. Right. Books that help you understand what to do, that give you instruction. I don't need to tell you about how the moon is this and that. So discipline paradox if you need help with the psychology. Now, look, and just the same thing like before, the workbook gives you the ins and out with this. So back to this. You back test just like a regular college, right? When you go to college, you learn, you study, right? Now you take tests. Those tests is you creating those flashcards. Now you're going to start demoing, right? That's your practice exam. When you demo, right? It's kind of like forward testing. When you demo, you could paper trade, right? But paper trading is pretty much you saying, I got a break and retest. Instead of me pulling the trigger on the demo account, I'm going to write it down. Okay. I'm going to write it down on my trading sheet. And guess what I'm going to do? I'm going to follow my plan, right? And remember, what you practice, what you study is what you're going to practice, right? So that means higher time frame, right? That's rule number one, right? Higher time, right? This is your higher time frame, 4 hour for entry time, right? H4, Entry PA. See that? SL, last low or last high. You see that? That is your psychology. Is what you practice. It's what you back test. Now, when you demo, when and if the market give you those price action, you're gonna check these things. All right, my setup was based off the weekly. Boom, higher time frame, right? Weekly and 4 hour time frame. Boom, check. PA, what kind of price action was it? Was it a bullish engulfing or a bearish engulfing? Okay, cool. Let's just say it was a bullish engulfing. What kind of bullish engulfing was it? Meaning that did it take one candle to engulf the last, right? Or did it take two candles to engulf the last bearish candle? Or did one candle engulf the last three? The different variation. Again, price action available, right? Now, your stop loss, which is your last high or your last low. And then you call it a day, right? So you practice it, right? And you demo it. The same fall in line. It's the same thing when we demo in paper trade. It falls in line. You could do both. I love to do both. Well, that's what I had to do. I demo it and I wrote it down. That right there, when you paper trade, that's why I love paper trading. When you paper trade, it helps you build the attitude, the mindset of having a trading log because you so used to documenting your trade, right? So you practice, right? While you demo it, now you're gonna go ahead and do a forward trading. It's the same thing, right? But we're gonna do the same thing, but this time around we're gonna execute, right? We're gonna pull this trigger. So we're gonna create a demo account where let's just say I wanted to start with $500 in my account or 1,000. You want to create a demo account with $1,000 or 500. You have to be realistic. If you're not gonna trade with $7,000, don't start a demo account with 7,000. You're not being fair to yourself, right? So when you forward testing, right, it's like interning, right? You go to the hospital or the fire department, wherever it is, and then you practice your actual skills, right? With the live market, right? With real day activity. So you're going to practice that, right? You want to do this for X amount of days, 2-3 months or weeks. It's really up to you. I recommend 2-3 months. All right. And then once you're done, then you go live. Guess what? When you go live, nothing is changing. You just continuing with the same thing. You document your trade as if it was paper trading because you're logging them as you forward trading. It just happened to be a live account. So you got to take these to consideration. All right. So your trading psychology is what you practice